Hello and welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. We are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
I'm doing something for this country, and I'm doing something for our Constitution. It's very important, far beyond me. And this can't be allowed to happen to other presidents. It should never be allowed to happen in the future. But this is far beyond me. This is bigger than Trump. This is bigger than me. This is bigger than my presidency.
There is going to be a temporary drop in support here that can easily revert back home to Trump over the next 157 days of this election. There is still a whole lot of time between now and November 5th. And so to me, I think that ultimately this is going to be viewed as a blip in what's otherwise going to be a much, much longer and probably convoluted story as this election season takes hold.
Trump is scheduled to be sentenced 4 days before the Milwaukee convention begins. So I would say it's starting. It's probably got some intensity to go before we see VIX really speaking to the election.
We've got 1 hour to go until the market close, and we're taking a look at the major averages here, which indeed are not really reacting much to what went on in the courtroom yesterday, but could potentially have repercussions down the line for markets, of course, speaking about the presidential election. We're going to get to that in just a moment. For right now, we've got the Dow trending higher, 267 points near the highs of the day with a gain of about 0.2%, but the other major averages are lower. We've got the S&P down 0.25% and the Nasdaq down more than 1%. I'm taking a look at the bond market again today because this morning, of course, we got the Fed's preferred measure of inflation. It came in pretty much in line with estimates. One fly in the ointment, though, we saw spending fall a little bit. So that's something that is perhaps of concern, or I should say spending came in lower than expected. We've got the 10-year yield moving lower, but that's not really helping tech stocks today or the market more broadly, which is interesting to see. Take a look at the sectors here, and you'll see what I'm talking about. Pretty broad-based sell-off within the S&P 500, and tech is the worst performer, followed by healthcare and consumer discretionary. Actually, we're looking at a week. Let's get back to today. This makes more sense to me. Tech is still the worst performer, but energy and real estate and utilities are higher. Yes, indeed, that makes a little more sense. Taking a look at the Nasdaq here, though, we do have some selling in the largest cap tech names. So, for example, you've got Amazon down by 2.5%, Meta down 1.5%, Nvidia down 2%, and Microsoft down 2%. So that explains the underperformance that we are seeing today in the Nasdaq in particular, with all of that selling going on. And then going back here to our trending tickers for just a minute, because there is one other stock that we want to check on as we are talking about this big story of the last 24 hours, and that's the stock you see here, Trump Media and Technology, DJT. As we talked about yesterday following the verdict, this is effectively a proxy for Trump himself and sort of a bet by investors on his election chances at any given moment. Today, you've got that stock down by 6.5%, Josh.
All right, Julie, now let's get to our top story, the fallout from the conviction of President Trump. While the markets are not moving on that verdict, it marks a key moment for the 2024 race as we count down toward November. And joining us now is Brian Gardner, Stifel Chief Washington Policy Strategist. Brian, it is good to see you. So, a question we're trying to get our heads around here, Brian, is what this means, if anything, for the election. You're the pro, Brian. That's why we turn to you. What are you thinking about?
There are so few undecided voters out there that I'm skeptical this has a big impact. Now, that being said, look, because it's going to be a close race, any impact can have an outsized influence on the outcome. But these are two candidates who have been on ballots for years, right? This is Joe Biden's fourth time on a national ticket in the last 6 elections. It's Donald Trump's third straight time. Voters know who they are. And so they've already made up their minds. The vast majority of voters have made up their minds. So is this going to move enough voters that's going to change the impact of the election? I'm very skeptical. I think this is going to be one of those issues that voters have way down at the bottom of their priorities, whereas the economy, immigration, foreign policy, they're going to rate much higher. And those are the issues that are going to impact the election outcome.
Brian, that said, for some reason, this feels like more of the formal start to the campaign season with this conviction, with this event, just because it sort of injected a little bit of energy into the news cycle around it. And I wonder, from an investing perspective, are there going to be other catalysts that perhaps investors are waiting for to get a little more clarity here? Is it going to be the debates? Is it going to be the conventions? Or do we sort of even have to wait until much closer to the election itself for the markets, at least, to really start paying closer attention?
One, I think investors have already started to price in the possibility of a Trump win. I mean, when I talk to clients over the last several months, more and more I get conviction from groups that they think Trump's going to win. I think that flows through into the markets. How you quantify that, I'm not sure. But do I think that, I have a level of confidence that investors are counting on a deregulatory, low tax agenda that has been behind some of the rally over the last couple of months. As for factors that are going to alter the race, I'm skeptical it's the debates because they're not going to reveal anything new. I'm skeptical it's the conventions because they're not going to reveal anything new. Going back to my earlier point, we know a lot about both candidates. They have been through several national elections. They are fully vetted. We know pretty much everything there is to know about them. Even yesterday was kind of a known unknown, right? We didn't know the actual outcome, but we knew all the facts behind the case. So it really wasn't that big of a surprise. What are the unknown unknowns? And I think getting to your question, Julie, I think those are events from maybe outside the U.S., surprise economic events. It's the surprise external event, not within the campaign, but outside the campaigns where campaigns have to react. That could mix up the elections. But issues, personality, policy issues surrounding the candidates, I think there is a level of voter interest and already making up their minds that I don't think people really appreciate. We're really far into this election already.
Brian, you look at these polls, the swing states, they seem to consistently, Brian, favor Trump here. What can Biden do right now? What should be his strategy? What can he try to turn this tide?
So the challenge for the president, for President Biden, is to turn the narrative of the election around. Currently, it's a referendum on him, and when you look at right track, wrong track polls, voters are very dissatisfied with the direction of the country. They're dissatisfied with the state of the economy. So Biden needs to somehow pivot and talk about other things, get it back on Trump. I'm going to go off on a little tangent here and try and use the third-party candidates, especially RFK Jr., to Biden's advantage. The narrative has been RFK helps Trump on a net basis, slightly. Well, there's some polling that suggests that there are a lot of voters who are not familiar with RFK's views on vaccinations. And of those Republicans who are unfamiliar with his views, when told, they become more supportive of him and less supportive of Trump. To me, the Biden campaign has the opportunity to kind of drive a wedge into those voters and drive them away from Trump over to RFK. Maybe the Biden folks don't get those voters themselves, but if they can reduce Trump's numbers and drive up RFK's numbers, I don't know how effective a strategy is, but it's something that if I'm a strategist, a campaign strategist, I'm looking at it.
Brian, coming back to something you said about the market sort of pricing in a Trump victory, and you seem to indicate in your notes that the market views that favorably. I was looking at the stock market returns. As we know, former President Trump very much saw that as a report card on his presidency. And indeed, the S&P 500 from his inauguration day until Biden's inauguration day rallied some 70%. It's been up about 35% or so under President Biden. Of course, it's come back a lot from the pandemic lows. But just why do people seem to think that another Trump presidency would be better for the markets?
I think it's loosening animal spirits, right? It's lightening the regulatory burden that multiple sectors face. And it's also increasing the chances that the current tax rates stay in place, especially for individuals, and also mitigates the possibility of a second Biden term in which the corporate rate could rise. And so I think that's why I expect markets to be more favorably inclined to a Trump win than a Biden win. Look, I should note, I think the day after the election, the markets could rally regardless of which candidate wins, as long as we have clarity and reducing the chance of violent unrest. I just think the markets would rally more with a Trump win than a Biden win.
Brian, I want to get you out here on this. Outside the presidential race, one piece of news certainly making headlines. West Virginia Senator Joe Manchin, you saw this. So leaving the Democratic Party, registering as an independent, Brian. Unclear now what his political future is going to be, since he previously announced he would not run for re-election. But it does raise this question of whether he will caucus with Democrats. How are you thinking through this one, Brian?
There's so little going on over the next couple of months in Washington. It doesn't change the calculus on Capitol Hill. I think it's interesting because I'm viewing it as a proxy. Over the last several cycles, we've had this move of kind of rural working class voters. Started with white working class voters in 2016, Hispanic working class voters in 2020. We're starting to see this continue into black working class voters moving towards Republicans this cycle. And I view Manchin as being close to that working class type of voter. And I think it illustrates the challenge that Democrats have. That's their old base, right? The Union Hall, moving away from that party to the Republican Party. The Republicans, on the flip side, have their own challenges because they're losing highly educated, wealthier white voters who used to be the kind of the country club set that used to be rock solid Republicans. They're moving to the Democratic Party. So I just think I see Manchin as a proxy for the ongoing realignment in American politics.
Brian, good to see you. Thanks for joining us.
Thank you, guys. Have a great weekend.
Well, within hours of that verdict, President Trump's campaign seeing renewed support as top Wall Street and business executives doubled down in their support of Trump's 2024 run for re-election. He also got a big inpouring from individual donors as well. Yahoo Finance senior columnist Rick Newman is here, but let's talk about the big donors for a moment, because they certainly didn't seem dissuaded. There was a lot of outspokenness on social media, for example, in support of the former president.
Yeah, and we're talking about guys like Elon Musk, Steve Schwarzman, Bill Ackman, some other billionaires. I mean, everybody who's sick of self-important billionaires, please raise your hand. I mean, I certainly am. Let's go back to basics here. One of these guys said this was a kangaroo court. This was actually a jury trial. This is the foundation of the American legal system, is a jury trial. So you don't respect the validity of jury trials. I think that's completely hypocritical. I mean, here's why. Everybody in finance knows that the United States is the world's premier destination for capital, in part because it has a rigorous and transparent legal system. Contracts matter. Everybody knows what the rules are. Everybody plays by the same rules. And guess what? That's why one of the reasons people get rich here in America. It's not Russia, okay? It's not just elites who are buddies with the president, okay? All these guys have benefited from a terrific, superb, foundational legal system here in the United States. And then to come out and say, oh, this jury trial is a joke, it's a scam, it's a sham, to repeat this garbage that Trump is saying. If something went wrong in this trial, it is going to go to appeal. The appeals court will rule appropriately, and it will say, okay, there was a problem. Probably they won't. Probably the jury is going to stand. So, I mean, if I had any of these guys here, I would say, okay, what other parts of the legal system U.S. legal system, do you object to? You don't object to a jury trial by jury. What else don't you like?
Well, we should note, though, Rick, it is not just billionaires who came out, right? I mean, it was Bill Ackman and David Sachs, Elon Musk. But listen, what did you make of Trump announcing $35 million haul after that verdict? And he said, and the campaign saying 30% were new donors. That's a lot of people. So
Trump's persecution complex is a familiar phenomenon by now. I mean, it's still very peculiar. I mean,
but it doesn't change the fact, Rick, that persecution, that's a $35 million and 30% are a new haul. I'm trying to get the point. It's not, we can talk about Musk, but that's not really what determines it. It's really, that's a lot of folks.
People identify with Trump's persecution complex.
Or do they identify with his policies?
I don't think it has anything to do with Trump's policies. I don't think it has. I don't think people even know. I don't think a lot of these people even know Trump's policies. They don't know Biden's policies either. I mean, Biden has done a lot of things that actually help people. I mean, he's done affordable housing. He's done all kinds of aid. He did the last round of stimulus checks. A lot of things. People don't give Biden any credit for that. Biden's green energy is helping Republican states and districts more than Democratic ones. Nobody knows or cares. There's something that nobody has really completely figured out yet, but it goes all the way back to 2016. Make America Great Again, American Carnage, China's eating your lunch, all this stuff. I mean, there are just a lot of people who like this victimology rhetoric.
Or do they feel that they were just better off when Trump was president?
That's part of what's going on, and it is actually true that gas prices, even adjusted for inflation, were lower when Trump was president, not for anything Trump did. I mean, that's just global supply and demand. But, I mean, this is the phenomenon of Trump, which is that he gets people to identify with him who feel the system has not worked for them, the system has screwed them over, they've been ripped off, that the system is rigged against them, and that's Trump's base right there. They're not necessarily, people say white working class, lower income working class, low information voters, AKA stupid people. They're not all. I mean, but there are a lot of people who are relatively successful who still feel the system is rigged against them for a whole variety of reasons. And Trump somehow figured out a way how to unify all of those people.
To Josh's point, it doesn't matter how smart or stupid you are. You know, if your dollar doesn't go as far now as it did.
And I don't know. I think it's. I mean, really, Rick, you really think all these Republicans are just saying, you know, it's rigged? Are they saying that, or are they thinking, you know what? I just believe in low taxes, less regulation. I think it's better for the economy. I think it's better for me, my company, and the country.
It's not as simple as you want it to be. I'm sorry, but.
I think you're making it simple, though.
This is not just Republicans. I mean, you're actually describing old traditional conservative Republicans, which is not the Trump base. I mean, Trump has pulled people out who never really were Republicans.
Well, I think the Republican Party has fundamentally changed. I take your point.
The black magic that he has that other Republicans before him don't have, and really no other Republicans have, is this appeal to aggrieved people. That is the thing that makes Trump Trump. And I can't explain it. I just know it's a thing, and I know that explains why the money comes pouring in every time something bad happens. I think you're saying aggrieved.
I think a lot of Trump supporters would say they just don't like the direction the country is going. I don't think those are the same thing.
The thing that gets Trump over the top is the aggrieved voter. His coalition is bigger than that. I mean, he had evangelicals in 2016 and 2020, for example. I'm going
to wrap you, but honestly, Rick, this is like a constant mantra here.
It's all
anger, but somehow there's never any mention of the anger on the other side. The other side's like dancing bears and rainbows.
So what people don't know is the producers are telling us to rap, and you can't stop. So we're going to make a whole show out of this.
I would love to.
I'll see you guys. You can just go.
We can go with this.
All right. We got to wrap. I'll wrap since they won't. We'll be right back here. We're just getting started on market domination. Core personal consumption expenditures showed inflation slowed in April. We're going to speak with an economist on the other side to break down the data. That's the important stuff for us here. Plus, Dell shares are tanking today. We're diving into the numbers with the president of Dell's Infrastructure Solutions Group. Stay tuned. We've got more market domination still to come.
Great.
The latest inflation reading coming in earlier for the month of April, in line with expectations. But our next guest says we'll need to see more of these prints before the Fed starts easing. Joining us now, James McCann, Deputy Chief Economist at Aberdeen. Good to see you, James. So how many more of these prints? How consistent a trend do we need to see before the Fed gets more comfortable with perhaps cutting rates?
Well, I think at least three and maybe more. Certainly the Fed was alarmed by the spike in inflation over Q1, and Chair Powell was very clear that three bad reports make something of a trend. So I think for the Fed, they're going to be looking at least three moderate inflation gains, and honestly, maybe more. I think that rules out the June and the July meetings. They probably put September as the first point at which they'd be comfortable easing, as long as things go their way on that inflation side.
And James, when do you think we actually get back to the Fed's 2% target? Do you see that as it's something in the second half of this year? It's more of a 2025 phenomenon. What's your timeline?
I think it's 2025. I think, actually they might get a bit more progress on bringing that year-on-year rate down over the next few months. But then it's going to be really, really hard to do over the second half of the year. The inflation they got in late 2023 was really soft, and so they need to get even weaker inflation to drag that annual rate lower. So I think they're going to have to wait till 2025, but I don't think they necessarily need to see core inflation fall back to 2%. I think they'd be comfortable doing cuts before then, as long as they think there's progress still going on, and that's contingent on a few more months of better data.
Well, and James, there was an analysis out from the Cleveland Fed that said in terms of getting back to 2% inflation, that might not even happen till mid-2027. Does that seem likely to you, that we could see that kind of a timeline?
It's not impossible. It's not impossible. I think there's a few things that will drive inflation lower, though, sooner. I think shelter inflation will come in weaker over a number of months. We've been disappointed in the translation of that for some time now, but I think that process is kicking in. I think we continue to see signs of domestic growth slowing, and I think that's feeding through to the labor market and to wages, and I think those dynamics will feed through quite nicely. But it's certainly true. We had a big inflation shock, and sometimes inflation proves persistent, and it could take us a while to see some of those lagged and feed-through effects coming through from that initial inflation shock. So, certainly there are inflation risks, but I do think we'll see pretty decent progress, and I suspect we'll get there before 2027. That would be really bad news for the Fed if it were to, see an overshoot on that type of time horizon.
James, I'm just interested to get your take on the consumer. How generally healthy, resilient you think the consumer looks, James? We still, obviously tailwinds, low unemployment, decent wage gains. How are you thinking through it?
I think the consumer looks in decent shape. I think certainly consumer spending has slowed from the really boomy rates that we saw over the second half of last year. And in some ways, that's probably a healthy thing. The fears were there that was driving a degree of overheating or driving a no landing style scenario for the US economy. But if we look at consumer fundamentals, real incomes are growing at moderate pace, which looks pretty healthy. The labor market still looks pretty solid. Yes, they're not saving a great deal, but their balance sheets in general look pretty reasonable. So I think all the fundamentals are there for slower but still very respectable consumer spending growth, about 2%. And that's a really strong engine of activity in the US economy, and that should keep things rolling on pretty nicely, we think.
All right, James, thanks for joining us today. Appreciate it.
Thank you.
Now checking in on some of today's top trending tickers, Japanese whiskey maker Suntory reportedly in talks to acquire American brewer Boston Beer, known for its Samuel Adams brand, of course. That's according to a report from the Wall Street Journal. So this one's interesting, Julie. So again, this is per the Journal. They say the two parties that kind of categorize this as early talks, citing sources. They say possible, nothing actually happens here, maybe not even a transaction. I didn't see any details on pricing, for example. Right. Boston Beer does have a market cap of around $3 billion, but the rationale, the Journal says, Boston Beer would obviously give Suntory kind of much bigger foothold here. Right, exactly. Suntory has already made some acquisitions in the United States, including of Jim Beam whiskey, but Boston Beer's had a tough go of it. Of course, as well as being the parent of Sam Adams, it also owns Truly Hard Seltzer, and there's been kind of a shift in consumer taste for hard seltzer, or at least an expansion to other types of newer canned drinks. Boston Beer also makes Twisted Tea Hard Iced Tea.
That, I guess, has done a little bit better, but it sort of floundered along with some of the other craft brewers this year, with the shares down about 25% before the pop that we're now seeing.
Yeah, how much of this too is just, and the journal kind of goes into this, just tasting preferences, non-alcoholics becoming a bigger deal, right? Interesting.
Yeah, exactly. All right, we are going to take a break right now, I believe. Oh, no, we're going to talk about Caesars. Oh, Caesars next. I was hearing Teas next.
It's very easy
and
to mix those two up.
And I got very confused. So let's talk about Caesars Entertainment.
And then we can go to
break. Caesars is jumping today on a report that activist investor Carl Icahn has a sizable position in the company. Those shares are jumping as well, about 11% here. And that is according to reports today from Bloomberg. And the shares are rising by the most in about a year and a half. We don't know what Icahn's plans for it would be, but he's bought casinos before.
Yeah, normally, obviously, you think Icahn, you think activists, carve out a stake, start rattling a cage. Per reports, Julie, that is not Mr. Icahn's intention here.
Or at least we don't know what his intentions
are.
Well,
the reporting so far has been actually kind of suggesting he likes the management team, no plans for a campaign. So, I mean, listen, we'll see how that kind of develops. That's at least the headlines. But Caesars, you pay attention to, largest owner of casinos in the U.S., and Icahn, of course, very familiar with this sector.
Yes, indeed. He has invested in it before.
Yeah.
Now's the tease.
You ever talked to Carl Icahn?
I have not.
Yeah, it's an experience.
Yes.
Yeah. Coming up, it is the latest edition of our series, Goodbye or Goodbye. We take a deeper dive into two stocks to help you make the best moves for your portfolio. Stay tuned. More market domination on the other side.
It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. As the summer season is upon us, we're navigating a turbulent few months for the airline industry with a Goodbye or Goodbye scorecard. Yes, for the first time ever, we're taking a look back at a call that a guest has made to see how it's done. And so let me bring in Steve Trent, Citi Airlines analyst. Steve, thanks for being here. So at the beginning of the year, your Goodbye, the stock you liked, was Delta, and you said to avoid JetBlue. So big reveal, let's see how you did. You did pretty darn good. Delta is up about 25% year to date, and JetBlue has fallen about 1% or so for the year to date, including today. So your call worked out pretty well, but you're sticking with it. You say this is still a good call to have, and you still like Delta here, right?
Yes, absolutely. I think we're in the early innings of this.
Okay, so let's go through why. You talked about wallet share gains for network airlines. So what do you mean by network? Network versus discount, I assume.
Absolutely. So if you bifurcate the U.S. airlines between the full service carriers on Delta's side and the discount airlines, the JetBlue's on the other side of the fence, you've actually seen a big pickup. Pre-pandemic, if you look at the earnings wallet share, the network airlines had roughly 75% of the pie. On our numbers, 2024, 2025, they have closer to 92, 93% of the pie. So I've seen these post-pandemic shifts in work. Most people are no longer in the office 5 days a week, so that fly out Sunday night, fly home Thursday night, it's not totally gone, but it's diminished. And I think that shift has led to hybrid travel, which has really benefited the network airlines.
Interesting. And also what we've seen is maybe more economic activity per available seat mile. So wringing more profit out of those seats at Delta. How are they doing that?
Absolutely. So the first issue you have, not only are they taking higher share, but we also continue to have a paucity of capacity on a per capita basis. So if we go back to 2019, there was a little less than $24 of economic activity per available seat mile in the U.S. domestic market. Last year, that was above $29. This year, we think it's going to be above $30. These global aerospace supply chain issues are not going away. So at the same time, network airlines are picking up more wallet share. The wallet opportunity itself is getting bigger from that dearth of capacity we have out there, and they're going to be able to price more effectively that scarce capacity than a discount airline.
It sounds like that means prices are going up for us.
Probably.
For you. Okay. And then finally, there are the co-branded cards that they have and the money that Delta gets from that. And that's going well, I guess.
It's going extremely well. And I would say Delta really has the best brand of a U.S. airline, and they've spent years developing that very good brand. And that's everything from being the very last airline to unblock the middle seat at the height of the pandemic, to the only major that did not dilute its equity holders with convertible debt or equity offerings during the pandemic, with a very small number of warrants that got issued to the Treasury Department because of the CARES Act. So when we think about that counterparty profile, a big global loyalty program, they're making very good revenue off of that. So we think that trend is going to continue, as well as be a really important distinguishing factor between the network and the discount airlines.
So let's talk about what could potentially go wrong for a Delta. We could see a regulatory crackdown. What would that look like, and what effect would that have?
Sure, absolutely. So you've seen little wisp of this already. Slightly trickier rules for the airlines in terms of being required to pay refunds to consumers after there's a certain number of hours of delays, stricter rules on compensation for checked bags. Does that get more intense for the group? I think it's hard to say, but do we get something more extreme that will limit co-branded card activity, limit loyalty program activity, I'm not saying it's going to happen, but this is kind of the wild card one would worry about in this case.
Gotcha. All right, so let's get to JetBlue now and your goodbye, the stock you don't like. As we mentioned, the stock has not done terribly well here, and you say it doesn't have its revenue verticals thriving. What does that mean?
Yeah, absolutely. So when we think about that fantastic loyalty program you have with a Delta or a United Airlines, for example, it's really tough for the discount airlines to have that same level of punch. So a large financial institution as the partner loves the big programs for the relatively wealthy consumers. They can cross-sell all day long. You know, a discount airline doesn't have that. It doesn't have the global capillarity. JetBlue has a very good Mint product, and they do some of that transatlantic, which is great, but that's a very small piece of the pie. So there's no trans-Pacific. They do not have a robust co-branded card program like the others do. They're largely domestic. You know, Mexican beaches, there's overcapacity now. Caribbean, there's some overcapacity. So they're in a tougher spot.
Gotcha. And then, of course, there's the big event that didn't happen with the company, right? They were going to get together with Spirit, excuse me. That fell apart. So now what is kind of the question?
Absolutely, and it's a tough one. So if you're JetBlue, in that case, you wanted scale. You wanted to jump to be the number 5 position in the group. And it also sort of reminds me of what we saw years ago with Southwest Airlines acquiring AirTran. Southwest needed the pilots and they needed the equipment, and they got both. JetBlue seemed like it wanted to do the same. The regulator said no. So we have the pilot and equipment issue. We have the geared turbofan engine issue potentially making some hiccups here in capacity growth. So it kind of begs the question, strategically, what do they do? I think it's a tough thing to make heads or tails of after that merger got blocked.
Yeah, and then that leads to the idea that there's not a way back to sustainable margins when you have those kinds of headwinds.
It's hard. So getting back as well to what I mentioned on the network airlines having that really big post-pandemic pickup in wallet share, you know, largely 2 network airlines. If you're JetBlue, on our numbers, it doesn't look like an easy path to get back to sustainable margins and earnings when you're in that situation. So there has to be some kind of course correct, you know, on your verticals or on your seat mile cost profile, and is not sure how either is going to get done.
Gotcha. And then what could go right for JetBlue? Well, they have new management, so they could come up with a plan maybe to address some of these issues.
Absolutely.
Yeah.
Look, they have a new CEO. She's terrific. She's going to do her thing. Strategically, are there surprises that we can see from them? Absolutely. You've got some Schedule 13D filings out there, some new people on their board. Do they have some wild cards to show the market? I don't necessarily see any, but that's always something that you've got to keep your eyes on.
Could happen. All right.
Absolutely.
And any position in either of these stocks?
Me neither.
Okay.
Yes.
All right. Well, you're sticking with it here, telling people buy Delta and avoid JetBlue. That's something that you've stuck with since January. So thanks for coming back, Steve. Good to see you again.
Thank you for having me.
Appreciate it.
That. Thank you.
And thank you for watching Goodbye or Goodbye. We'll be bringing you new episodes 3 times a week at 3:30 p.m. Eastern.
Dell handily beat across the top and bottom lines in its most recent quarter thanks to strong demand for its AI server business, but the stock is tumbling during today's trade as questions linger on the company's margins. And here to discuss, we are now joined by Arthur Lewis, Dell Technologies Infrastructure Solutions Group President. Arthur, it is good to have you on the show. So let's dig right into this, Arthur, because the issue does seem to be margins, Arthur, and margins around the AI servers. You know, Bernstein's Tony Sacconaghi on the call, you heard him, Arthur, and I think he kind of put his finger on it here when he said it looks like operating margins for AI servers are effectively at 0. So, Arthur, can you walk us through this? What are the puts and takes here? What do you see looking ahead? And do you think, Arthur, that maybe is the market missing something here?
Hey, Josh, thank you so much for having me on the show. Look, we see incredible momentum in the infrastructure business. You think about $2.6 billion in orders, $1.7 billion in shipments, $3.8 billion of backlog, and a next 5-quarter pipeline that's a multiple. There's significant momentum. But I mean, think about this. I mean, this is a startup business for us that we started shipping in Q2. Over the last 4 quarters, we've shipped over $3.5 billion of AI dedicated servers. We are winning more share with the tier 2 CSPs, and we are helping every enterprise customer out there think about their deployment of generative AI. In addition to that, we see growth in our server business, 2 consecutive quarters of year-over-year growth, 4 consecutive quarters of sequential growth. And so we're excited about the server recovery. And, as we said, the storage recovery, sort of lags the server recovery by 1 or 2 quarters. So we see that ramping up in the second half, which is why we took up our guidance to over 20% in ISG and delivering operating income well within our long-term growth framework of 11 to 14%.
Arthur, it's Julie here. At the same time, I did see some analyst commentary that your outlook for the full year implies that you are not going to see very much AI server growth. Can you talk to us about that? What sort of, if you unpack your forecast, what it implies on that front?
Yeah, so, we have sequential growth going into Q2, and we have the second half sort of flat to that. And the reason is because while we have a significant backlog, a lot of the demand is project-based and is also based on, sort of suppliers' availability to deliver, especially around the Blackwell 200 processor. So it's really non-linear demand that might be a little difficult to forecast. So I think that's what you see in our guidance.
Arthur, let's also talk a bit about competition here, because you got Supermicro. Wall Street loves that name, built around its AI practice, selling at relatively low margins. You see Lenovo putting a lot of money to work in their AI game. Are you at all, Arthur, kind of feeling competitive pressures there? Arthur, you hear me on there? Arthur, I think we might be having an audio issue there.
Oh.
I think we had a technical issue there, which is too bad, but that was, we thank Arthur for his time.
Yes, and maybe we can work on getting him back soon. Well, coming up, as shoppers flock to where they can find the most savings, how should you be positioning your portfolio in the consumer staples sector? We'll tell you on the other side in today's Investor Playbook.
All right, we're joined by Arthur Lewis, Dell Technologies Infrastructure Solutions Group President. Arthur, apologies for that technical snafu. The magic of live television, Arthur. What can I tell you? I was asking you, Arthur, about competition because my point being Supermicro, the street in love with that name, built around its AI practice. You see them selling at relatively low margins. You got Lenovo, they're putting money to work in their AI game as well, Arthur. I was just curious if you're feeling any kind of competitive pressures there.
Look, we're very focused on delivering on behalf of customers. Our innovation engine is firing on all cylinders. I don't recall a time that, we've run our engine, sort of this hot. You think about the 9680, we had 3 killer design points. Number one, a consistent architecture that offered up silicon diversity, that would offer up GPUs from Nvidia, from AMD, from Intel, a design that had significant network capabilities and the most dense and energy efficient, and we hit it out of the ballpark on all 3 of those. We've done one better with the 9680L, which is specifically designed for liquid cooling, the first instantiation of which will be on the Blackwell 200. We've improved density by 33%. We've improved energy efficiency 2.5%, and we've significantly improved our networking capabilities. We also offer the opportunity to, we also offer the networking capabilities with enhanced fabrics, Ethernet, and InfiniBand protocols, as well as the world's broadest storage portfolio, especially on the unstructured side, starting with PowerScale and the F910 that we just announced at Dell Technologies World last week. So when we think about servicing customers and their needs, generative AI is a system that comprises compute, network, and storage. There's only one company in the world that can deliver that system optimized and tuned for AI, and that's us. And I have a privilege to service both Tier 2 CSP and enterprise customers.
Arthur, let me ask you a bit about your partnership with Nvidia too. You're real out front with it, and it makes a lot of sense. Jensen Huang has the AI chips everybody wants, but on the other hand, Arthur, they do cost a lot. Supplies limited. I'm curious if that has held up sales in any way for you all.
It doesn't hold up sales. And let me just say, we've been working with Jensen since 1996 when he launched the first GPU. They're a very strong partner and a very strong collaborator in our AI factory. We also have, obviously partnerships with other providers, including AMD, Intel, and Broadcom. So it doesn't really hold up orders. It would potentially hold up shipments, but we have a very strong collaboration with Nvidia.
I want to talk about storage as well. That came in flat, Arthur, and I know you kind of mentioned seasonality. I guess my question though was, if AI is such a driver of the business, why is storage flat, Arthur?
Yeah, so the storage market typically lags the server recovery by 1 to 2 quarters, and so we start to see the storage market pick up in the second half. And that's sort of baked into our guidance and part of the reason why we raised our guidance for the full year. I would also say that while the vast majority of customers are enterprise customers, they are relatively small mix of the revenue, and so you're going to see a lot more of that storage drag come along as the enterprises start to pick up.
Arthur, it was great having you on the show. Apologies again for the technical hiccup. Hope to see you again soon.
Thanks, Josh. Thanks, Julie.
The Personal Consumption Expenditures Price Index, PCE, Jay Powell's favorite inflation gauge, revealing signs of consumer spending weakening. It's coming as the U.S. economic growth in the first quarter was revised lower, primarily reflecting a downward revision to consumer spending as shoppers flock to where they can find the most savings, which names in consumer staples can rise to the occasion. We're looking at how to navigate the big picture with the Yahoo Finance Playbook. Brian Spillane, Bank of America's senior consumer goods analyst, joining us now to discuss. Brian, great to have you on the show. Let's start maybe big picture, Brian. You're covering a lot of names. In your coverage universe, as you kind of made your way through his reports, you listened to the conference calls, Brian. What was your takeaway? I'm just curious about the consumer right now. You can certainly think there's certain tailwinds, low unemployment, decent wage gains. On the other hand, we were hearing a lot of talk about maybe a more cautious, prudent consumer. Brian, what were your takeaways?
The high-level takeaway is there seems to be a disconnect between what we all see in the macro data and what we're seeing in terms of the consumer staples companies and their performance. And I'd say a key theme through earnings season, and I think we'll hear more of this as we kind of move into conference season, if you will, is just volume growth, or volumes are largely for most of these companies declining in the U.S. And it's more pronounced in the packaged food companies than it is with beverages and then household product and personal care. But it's been very surprising. I think the expectation as we went into this year was that consumption would begin to make a turn as we moved into the spring, and so far it hasn't really happened yet. And there's a lot of many different reasons that have been given for it, but I think at this point it doesn't seem like there's any one certain thing that you can point to that says the volumes are declining and we'll get a turn.
Well, and what's so interesting, Brian, is that for a while it was okay the volumes weren't doing much because the companies were raising prices. You had price over volume. But if volumes are going down, are these companies still going to be able to make up for that with price? It doesn't feel like we're there, does it?
No, not at all. And that's going to be a big storyline for this group really through the balance of this year, because we are now anniversarying most of the price increases that were taken last year. And, for context, you look at like food companies, for instance, prices are up anywhere between 25 and 30% since 2019, 20% or more in beverages, a little bit less so in household product and personal care. But we've rebased prices higher, right, in a way over the last 5 years that we haven't seen since the 1970s. And right now, consumers have, the elasticity hasn't really come back yet, right? Volumes haven't come back yet. So we are seeing changes in consumer behavior, more economizing in a lot of different ways. But with that pricing anniversarying, volumes don't come back. We're going to start looking at, for some of these companies, organic sales begin to, flirt with going negative. And that's going to be a very big storyline as we move through the back part of this year.
Well, and Brian, the conventional line during this period of inflation has been prices don't go down, they just go up at a slower rate. But in the case of some of these products, are we actually going to see some price cuts to get more volume through the door?
It would be historic anomaly. I think we went back and looked at this over the course of the last 40 years or so, and there's really been only one instance, and you have to go back way back to the 60s, where we had an instance where inflation happened and then prices dropped. Basically, through over the last 40 years, through every cycle of inflation, it's, as you said, it's just the rate of inflation might moderate, but we've never reversed. That said, right, we've got volume weakness. We have retailers looking to offer value to consumers. We know in the restaurant world we're beginning to see more promotions with quick serve restaurants. So I think the first step will be if we start to see companies maybe increase promotional depth. Does that drive lift? If it doesn't, then that might be the scenario where companies will have to face either accepting that volumes remain sluggish or acting on it. But I think it would take a lot for that to happen, because the margin implications of rolling back price is going to be would be value destructive.
Hey, Brian, we had a headline drop from the Journal about how Boston Beer in talks to sell itself to Suntory. Not asking you to comment on that deal, those names, Brian, but I am interested just in the general trend of alcohol consumption. What are you seeing, Brian?
Yeah, so two things I would say in response to that. One is, in this volume conversation, alcohol across wine, beer, and spirits in the U.S. has softened, right? The beer industry in the U.S. year to date is declining at a 2 to 3% rate. Spirits industry has moved closer to flat, and the wine industry also down slightly. So we've seen that economizing behavior even occur within beverage alcohol, and that trend, I think, is something that could precipitate more transaction activity, right? More self-help type actions. And, if you think about a company like Boston Beer, again, just thinking about this theoretically, the beer industry isn't growing. We have this blurring of beer and spirits with ready-to-drink cocktails. You start to think about, does it make more sense than it ever has historically for beer companies and spirits companies to somehow either merge or work even more closely together than they are right now?
Brian, great to see you. Thanks for being here as always. Appreciate it.
Yeah, you're welcome. Have a great weekend.
You too. While we're wrapping up today's Market Domination, don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime. There is the closing bell on Wall Street, and now it's market domination overtime. We are joined by Jared Blickry to get you up to speed on the action from today's session. Let's start with where the major averages ended up, and up being the operative word because we got a big old updraft here at the end of the session for the Dow in particular, finishing higher by 583 points. That's good for a gain of about 1.4%. And I know Jared's going to go through the monthly numbers, but if you look at the week here, still down on the week by about 1% for the Dow. The S&P 500 also a little bit of a pop up here at the end of the day. It actually was negative for much of the session, finishing higher by 0.8%. And actually, I should be looking at the 4-day, not the 5-day, shouldn't I? Because this is a short week. Still, the S&P 500 down about 0.5% on the week. The Nasdaq on the week down more, about 1% on the day. It too had a surge at the end, but not enough. Very, very close, but not enough to bring it into the green on the day. Jared, as I noted earlier, we had, well, the 10-year's on there somewhere. The 10-year yield, my aim was good, 4.5%, 4.51% on the day here, Jared.
Yeah, it was really interesting. We saw this late day hockey stick rally, and let's go back to the Wi-Fi Interactive and I'll chart some of that for us. There's today. I'm going to pull up the month to date, and it wasn't the greatest month for the Dow. And in fact, the Dow peaked mid-month, sold off pretty heavily over the last 10 sessions or so. But you take a look at the Nasdaq, very different story for the month of May, 6.88%. So this is the best May for the Nasdaq Composite since the year 2003. So pretty impressive to see that. Kind of rabbit got pulled out of the hat at the very end of the day there because we were about to miss that. S&P 500 somewhere in the middle, up about 5%. And when you take a look inside the price action, what went on within the indices and within the sectors, really fascinating to see how things changed over the month. So here we have, this is just today, energy in the forefront up 2.5%. Let me show you month to date. We had 22 days in this month, and utilities was the #1 sector. We've seen that becoming the new AI trade, and guess what? Tech, not to be left out, is #2 at 7.1%. Then you have communication services, so that's Meta and Alphabet, and then you have real estate. All of those outperforming. But what happened over the last 7 sessions that the S&P 500 peaked and then sold off a bit, only communication services in the green, and we saw tech take a massive hit, led to the downside by software. So let me show you what happened in software over the last 7 days, and that looks pretty bad. But when you take a look at the month overall, not bad at all. In fact, you can see a little more red than green, but you do have some big winners there. If I show you the same thing in semiconductors, you have overwhelming green here, and that's led by Nvidia. Nvidia couldn't save the S&P 500 from a red close that one day, but it's definitely been doing a lot of the legwork here. When you take a look at unprofitable tech for the month, that took quite a bath there. Some exceptions, you have exchanges doing well, so Robinhood, not exchanges, brokers doing well, so Robinhood up there, and then Coinbase, which is both an exchange and a broker, did well as well. You see Beam Therapeutics kind of in the middle, up 12%. We also saw meme stocks take off at the beginning to the middle of the month, and let's just see what they did, how they rounded out. It looks like GameStop ended up May up 100%, cost right there with it, up over 100%. And let's see if I can find AMC. Not seeing AMC, here we go. 48.5% for the month of May, and then still down 28% for the year. Guys.
All right, thank you, Jared. Stocks closing the day mixed following the conviction of former President Donald Trump. And while it may take some time to see the reactions in the polls and the markets, the chart shows the S&P 500 has been rising right alongside Trump's chances of winning. For more on this, let's welcome in Adam Turnquist, LPL Financial Chief Technical Strategist. Adam, it is good to see you. So you brought us a chart today, Adam. We appreciate it. We like charts. And basically, you were looking at the relationship between the market and Biden and Trump election odds. Tell us what the chart tells us, Adam. What does it suggest?
Happy Friday. Thanks for having me. And it's been an interesting chart to watch because when you look at the predicted.org odds between President Trump or former President Trump and President Biden, they've been shifting over the last few months. And what we've noticed in terms of how the market has correlated to those, it's become increasingly correlated to former President Trump's election odds. As the markets moved higher, his odds have also moved higher, so that correlation has strengthened. In contrast to that, you've seen President Biden's odds remain pretty much negatively correlated to the market over the last few months. And where that shift really took place is when former President Trump's odds actually started to eclipse President Biden's odds. And again, this is based on predictit.org odds that we looked at and ran that correlation analysis. So pretty interesting story. I think the one-liner is that the market is warming up to the idea of Trump victory this fall.
I feel like it's almost a chicken and egg situation, Adam. Is it that the market is warming up to it, or that when these things happen in the market, that then causes changes in the election odds?
It's a good question, and I think you have to caveat all of this with correlation does not imply causation. So the chicken and the egg argument is very valid. Perhaps there's just an overlap. One thing we know, the market doesn't like uncertainty. We saw that in the beginning of the session today with what happened with the conviction with President Trump. There's going to be a lot of uncertainty, I think, until we get through the sentencing in July 11th, perhaps acting as a little bit of an overhang. But for today, you can see the market shrugging that off, and it looks like another pretty solid close into the weekend here for the S&P 500.
You know, Adam, let's set aside politics, put back on your technician's hat. I'm just interested to get your take on the SPX and where we do head from here, Adam, in kind of the near intermediate term, because you point out, May kind of unseasonably strong. So what do you think June is bringing us?
It was a great May for the S&P. It's not a seasonally strong month. We're closing up here. I didn't check the last stats, but call it around 4%. That's a really good May for the S&P 500. However, those seasonal trends don't tend to carry into June. June is on average up 0.1% for the S&P 500. Even with a strong May, you don't tend to get a positive or a much of a positive June. Could be some of those summer doldrums that we talk about. But if you look at just overall those Memorial Day to Labor Day type of returns, on average, going back over the last 50 years, average for the S&P, that is, you're up 1.8%. More recently, I think the last 10 years are up about 3.8%. So maybe a little bit better returns more recently as we go into the fall.
Adam, I've been noticing over the past couple of weeks, and really over the past week specifically, we've seen large cap tech sort of lagging here. We've seen breadth sort of breaking down. That's something we've been talking a lot about. What does that imply about a sustainability of a rally as well? Do you think that we'll continue to see sort of lagging performance from large cap tech? And then what does that do to the rest of the market's performance?
Tech has actually had a pretty good comeback in terms of relative performance. But to your point, that leadership has been very narrow. I think Nvidia contributed to around a third of the S&P 500's gains this year and this month. So what we've witnessed in the context of this bull market is the generals lead and the soldiers follow, meaning narrow leadership at these important inflection points, and the rest of the market tends to catch up as the rotational pressures move into more cyclical sectors. That's going to be key for the market this summer. Are we going to see a broadening of this market? Are we going to see new 52-week highs beyond just the tech space?
Adam, I'm glad you mentioned Nvidia because we have a rule on the show. You have to say it at least once. What I thought, interesting to get your take there on what the charts are saying, because I thought I read recently, Adam, that you were making the case that, Nvidia, kind of the recent breakout suggests maybe outperformance could continue.
Yeah, we don't cover the stock, so it's not a formal recommendation. But if you just look at the technical observations of Nvidia and the breakout from what we call a bullish flag formation, not to get too technical on a Friday afternoon, but you measure that out, you can get an upside price objective around $13.50 for Nvidia. Of course, that's not our recommendation or a call, but that's what the technicals are telling us. And look for further outperformance, even on a valuation basis. When you look at it versus semiconductors, it's actually trading cheap on a longer term basis. And even to the market, it's pretty much in line, just looking at forward PE multiples.
Adam, thanks a lot for your analysis. Helpful stuff. Appreciate it. Have a great weekend.
You too. Thanks.
Thanks. Well, stocks wrapping up the last trading day in May with the Dow jumping nearly 600 points. The major indices finishing off a winning month. And Yahoo Finance's Josh Schaefer here with more on the market takeaways. So we've been looking at the month, as we were just talking about, the tech trade had a comeback and then sort of pause.
When I wrote my takeaways today, candidly, I wrote them about 2 hours ago when I was thinking about them. The Nasdaq was down more than 1%. What happened?
Funny way of doing that to you.
It was still the weak link on the day.
Yes.
To be fair.
It was. And the tech trade had cooled off a little bit to end May, right? So at one point we were pacing for the best May in the Nasdaq since 2005. I think we might have just got it, but it had been sort of teetering over the last week, and that was really off some different earnings releases that we saw over the past week. You had Salesforce come out. They didn't get a positive reaction to earnings. You didn't have Dell get a positive reaction to earnings. MongoDB is a company that's had an AI tie. I'm sort of referencing a bunch of companies that have had AI ties here. And investors just weren't overly satisfied with what these companies had to say. And I thought Citi strategist Scott Kroner had a good point on this, essentially just saying in this environment that we're in right now with prices so high, you're near record highs, the beat and raise environment just continues to be a trend in earnings. If you're not beating and raising by how much the street thinks you're going to raise by, right? You're just seeing stocks get pressured. And then I think you guys were just talking about sort of one of our other points here is breadth. If these stocks come under pressure, are you going to get more breadth or no? Because if you don't get more breadth, then obviously that's when we probably have a little bit of a pullback.
Right. Well, talk to us more about breadth, because
Yes.
we've been talking about that a lot this week. You've been looking at you and I have seen a lot of charts about this.
A lot of charts about bad breath, Julie. Hopefully we both have good breath. But we're looking at a chart about bad breath here, right? A little pun on a Friday. So this is from Bank of America strategist Michael Hartnett, and he's highlighting the difference between the S&P 500 market cap weighted, which is the normal S&P 500 that we talk about all the time, and the S&P 500 equal weight, sort of how they're moving in connection with each other. The S&P 500 equal weight has been one of the indexes we've been following over the last year for signs of broadening, because the equal weight index doesn't move because Nvidia goes up, right? It's equal weighted. The normal S&P 500 can be driven by big stocks moving higher. So when we have been tracking sort of the broadening, you go back to December last year, remember the soft landing euphoria trade we talked about, and that broadening, the equal weight actually started outperforming the S&P 500 at that point. You even go back to March, the equal weight was doing well. Now, over the last month, the S&P 500 was up about 4%, equal weight only up about 2%, sort of showing us that we have lost the broadening trend that we have been talking about. And I think when you spin that forward, it kind of makes sense based on how we're talking about Fed policy right now and the overall trajectory of the way the rest of this year looks, right? The broadening trade was supposed to come with at 1.6 rate cuts. Now we're down to less than 2.
Yeah.
So I think as we're pricing out rate cuts, you have yields high, maybe the case for the broadening trade isn't as strong as it once was.
Maybe not.
What about, I'm just to get your take, PCE, and whether that kind of, did you see any kind of shifts in when people think cuts are coming?
So we had an inflation print today that came in line, right? And it didn't seem like the market cared all that much. I mean, I guess we ended up rallying at the end of the day a little bit, but largely I think if you had the PCE print showing what it did, which was the slowest monthly increase of 2024, it reversed trend a little bit, right? We had 3 months of bad prints, and then you had this month, kind of your key line here to look at is the purple line. It's the 3-month annualized rate. And so that in the first quarter was looking really bad. It was ticking up, and you can see it came down a little bit. But I think it seemed like the reaction from economists was very similar to what we've been hearing from Fed officials, which is, okay, good job, okay, print. We need more confidence.
More good data.
We need more good data.
As Jay Powell said, right?
Yeah. So maybe we'll get it, I don't know, next week, the week after.
Who knows?
We'll be waiting.
Who's to say? Joshua, thank you. Coming up, we're taking a look to next week and telling you everything you need to know to get ahead of the game. Stay tuned. More market domination over time coming up.
This is a defining moment historically. It's also going to be the way that President Trump continues to play this victim card, a victim of the system.
There is going to be a temporary drop in support here that can easily revert back home to Trump over the next 157 days.
Trump is in a situation now where he needs to unify the Republican Party. He needs to get a majority of independents in order to win. That's how he won in 2016.
It's very difficult for either campaign to speak over the impediments or the headwinds that they're facing.
This is a beginning of an unraveling of something I suspect is pretty terrible to come.
We're continuing to monitor the fallout from Donald Trump's conviction, and joining us now to discuss what it all means and what comes next for the president, we want to welcome in Jack O'Donnell. He is the former president and chief operating officer of Trump Plaza Hotel and Casino. Jack, it's good to have you on the show. So you're an interesting guy to talk to about this, Jack, because you used to work for Trump. So I'm interested just quickly here, what did you make of the verdict, Jack? What did you make of Trump's response?
Well, thanks for having me, first off. Well, I was shocked, to be honest with you, at the verdict, not because I thought that he was innocent. It was just a matter of someone that worked for him closely. I see how I know how he operates. I was shocked that he finally caught up with him. He began to believe that he's never going to, be accountable for his actions. So I was shocked, to be honest. I wasn't overjoyed. I think that there's a real downside. But I think his reaction was filled with Trump. There was that moment in the court room after the verdict was read and he was leaving where people said it was a human moment, so to speak, when he reached out to grab his son's hand. But he went right back to Donald Trump very quickly. That's the Donald Trump of revenge, Donald Trump of anger. And I think you saw that almost immediately. By the time he got, back to the Trump Tower, he was ready to fight. And I think even the comments that we've seen today indicate that he's going to be on a crusade of revenge from this point forward. And I don't think he'll take prisoners if he is elected again.
Jack, as we've been talking about, there is nothing that was sort of particularly revelatory about this trial and conviction, right? Donald Trump is very much a known quantity at this point. There are few surprises left when it comes to him. So when we look at how he's perceived in the country and what people are going to do, I mean, there was just a poll that just came out, a Reuters poll that found that 1 in 10 Republicans said they were less likely to vote for him with this verdict. But the election's still a long way away. So how should we be thinking about it in that context?
Well, I mean, look, I think you're right. He really has earned the nickname Teflon Don over the years for dodging, legal consequence. But clearly, I don't believe that this conviction is going to have a negative impact on his days. That's very, very clear to me. The Trump supporter is not going away. If anything, I think they're going to become stronger supporters, both financially and emotionally. Not necessarily the emotional support that they give him. As one of your other speakers said, is he going to be able to, attract independent voters, undecided voters? And that's a big question. I think if you're a Biden supporter, you're hoping that he can't. I think he has already unified the Republican Party, however. I don't see any weakness there. There's going to be a character here and there, a senator here and there that might say, how can we elect a convicted felon? But I don't think the support from the Republican Party is going to waver at all between now and November.
Jack, thank you so much for taking the time to join the show and share your thoughts. Appreciate it.
Thank you for having me.
Time now for what to watch next week. We're going to start off with the economy. The monthly jobs report for May is coming out on Friday. Economists forecasting non-farm payrolls to increase by 15,000 compared to last month. Unemployment rate expected to hold steady, while hourly wages tick up slightly from April's report.
On the earnings front, we'll be getting a new batch of companies reporting, including CrowdStrike, Campbell Soup, and DocuSign. CrowdStrike announcing first quarter results after the close on Tuesday. And analysts expect the cybersecurity company's recent partnership with AWS will be a focus on the earnings call.
Some other earnings on deck next week: Lululemon, Dollar Tree, and SunPower reporting, among others. Dollar Tree announcing first quarter earnings before the bell on Wednesday. According to analysts, consumables could be the main source of growth in the first quarter for the company. This coming after we saw Dollar General, the rival discount store chain, report strong results for its fiscal first quarter yesterday. But the company also warned that customers continue to be price sensitive.
That'll do it for today's Market Domination. Be sure to come back on Monday at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's our new show, Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned. Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we're going to break down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. A guilty verdict for Trump, but the fight is far from over there. The former president denouncing the trial as a scam and promising to appeal with only months to go before his November rematch against Biden. And consumers cutting back. The main engine of U.S. economic growth grew at a modest clip in April, suggesting that after last year's defiantly strong spending, inflation may finally be taking a toll on Americans. And a winning month across the board, all three major benchmarks ending May in the green. The tech-heavy Nasdaq gained the most, getting a big boost from AI darling Nvidia during the period. And now to our top story of the day. Donald Trump is doubling down after his conviction. In a speech earlier today, the former president made it clear he's still confident heading into the election.
The Daily Mail just came out with a poll, and it has Trump up 6 points in the last 12 hours. 6 points. 6 points since this happened. Who thought this could happen? Because the people of our country know it's a hoax.
And joining me now is Gautam Mukunda, author and lecturer at the Fletcher School of Law and Diplomacy. Gautam, great to have you on the show. Let's just start there with the news. I'm interested, Gautam, get your reaction, your response to the verdict. Were you surprised by the verdict, Gautam?
So I wasn't surprised by the verdict. I was surprised by how fast it came. And the fact that 12 jurors, and I just want to pause for a moment because those jurors had an impossibly difficult situation, right? We know that they are going to get death threats. They're going to get harassed. They were under an extraordinary amount of pressure, and they were still able to do their job in the space of just a few days and come out with a unanimous verdict. That, in all the sort of chaos and confusion of the American political system that we have right now, it's pretty striking how when things go to trial, jurors seem to take their job really seriously. The average American seems to really, really care once they swear that oath.
There is, Gautam, just to give the other side, there's a lot of Americans, though, who feel differently today. I'm just interested to get your perspective on this. Yeah. And you know the narrative that's out there today. It's that, Alvin Bragg ran to get Trump, that this trial and this jury took place in a city that Biden won by, 80%, that there's this, the feeling is that there's a sort of politicization of the court system, of the legal system. You hear that story. I'm just interested to get your take, your reaction to that.
You do hear that story. I want to be very clear because the facts on this case are sort of important, right? Alvin Bragg did not run on the case that he would promise to go after Trump. He never made that promise. What he said deeply unwisely, and he should never have said this, was that he was well suited to be the prosecutor because he was someone who had sued Trump in the past. But he also said that he would not do that. He would make no promises about what he would do going forward. He should never have said what he said, and that is not okay. And it does give a lot of grounds, a lot of reason for people to say that this politicization might have happened. But remember, the founding fathers mandated a jury trial in the United States because they said, right, that is the surest protection against tyranny by the government. So you're right. Let's say that Joe Biden got 80% of the vote in New York. If you just do the math on that, 80%, you should expect 1.5 to 2 Trump voters in the jury pool, right? And in fact, we know that one of the members of the jury got all of their news information, all self-report, from Twitter and from Truth Social. So it is true that was a jury pool that is probably more favorable to Democrats than Republicans. It's also true that there's no reason to believe that all 12 of them were that. And the verdict was unanimous. And I'll just say, this may be overturned on appeal. That's certainly possible. That's not the jury's job, right? The jury is the finder of fact, not the finder of law. And as finders of fact, they seem to have taken their job very seriously.
And Gautam, I want to ask you one other thing here. So we have the verdict. Trump is defiant. It was interesting to see some of the people, Gautam, who came to his defense. Some very notable billionaires, big names with deep pockets. Elon Musk, David Sachs, Bill Ackman, coming out, voicing their support online. What did you make of that, Gautam?
So it's not enormously surprising. And so we can sort of go through that in a few things. One is just on the simplest of calculations and the most material one, the Trump tax cuts, which were massively favorable to people like Bill Ackman and Elon Musk, are expiring in the next couple of years. And the only way they will be renewed, given that they are going to cost more than $1 trillion, is if Donald Trump is reelected. So there's a simple financial calculation. The second is just that, right now the polling data supports a Trump win. We can talk about whether that's that's likely to be by election day or not. But, Elon Musk and Bill Ackman are brilliant investors that doesn't make them brilliant political prognosticators. That's a completely different skill. It wouldn't be totally shocking for them to be thinking, well, this guy's going to win and I should back him. And, there are other sort of issues and concerns as well that we should think through. Musk is under a variety of different pressures and sort of different issues. Ackman has been on a serious crusade on issues involving freedom of speech that have flipped him from a reliable Democratic donor to something very different in the last few years. So it is not exactly shocking, though, Josh. Let me flip this around. Do you think it needs a big explanation for why people who will hugely benefit from Trump's policies are supporting him? It doesn't seem to me that is something that's all that hard to explain.
Fair, Gotham, fair enough. We loved having you on the show today. Thank you so much for your time. Have a great weekend.
Thank you, Josh.
Coming up, banks are pumping billions into private credit. We're taking a closer look at what's behind the frenzy next. That's on Asking for a Trend. There's a relatively new asset class that's been attracting billions of dollars, private credit. Banking giants putting together over $50 billion into private credit in recent months. That's according to Bloomberg. To break down private credit trends and its risks, Yahoo Finance's very own Julie Hyman is here with the details. Julie.
Hey there, Josh. Well, really, headlines have been piling up when it comes to private credit, including that report that you mentioned, Bloomberg today, saying that the largest banks, including the likes of Goldman Sachs and Citi, Wells Fargo, have indeed raised about $50 billion of raised or committed capital to put into private credit. So that brought me to this chart from the International Monetary Fund, which put together the numbers for this going into 2023, where they found, and this this is the blue line, $2.1 trillion in invested or committed capital into private credit. You see that only is dwarfed by private equity. And then you see down here stocks, the S&P 500 and the MSCI World Index of Stocks. So basically there has been a boom in private investments. Now, when we talk about private credit, what are we even talking about here? Well, just like you have private equity, where firms like Blackstone and our parent Apollo raise money to invest into companies, private credit is them raising money for funds to invest in either things like direct lending to companies or other types of financing vehicles, real estate or other types of lending vehicles and the like. And there has been a real growth in this area in the past few years as these companies have been looking for different opportunities. That has both been a sort of competition to the establishment banks, as well as something that has enticed them, as we see from the fact that they have raised this money. And the other reason it got headlines this week is because Jamie Dimon, the CEO of JP Morgan, talked about private credit at a conference and talked about maybe some of the pitfalls here. He said there could be hell to pay, for example, if retail investors got into these instruments without fully understanding them. That's because many of them have lockup periods where people can't get back their money for several years. He talked about a granny, a theoretical granny, if she put her money in here, couldn't get it back, and then there was sort of a ripple effect. Maybe there could be a run on the fund or an attempted run on the fund. Maybe Washington could turn its eye towards this. He also talked about bad actors in this industry, but he said that seems like the minority for now. JP Morgan, by the way, is also getting into this business. So it's quite interesting that we have seen the rise of this over the past few years, Josh.
And I guess you're sort of going where I was headed, which is, you laid it out, great explainer there. So if you're listening to this and you're thinking, okay, what are some risks of this trend I should have on my radar? How would you explain it?
Yeah, so those are a couple of the risks that Dimon laid out, but really there's other stuff to talk about. I mean, it's a private market, so you don't have them. The corporate bond market would be the public counterpart to this. And even though that is not quite as liquid as, say, the public stock market, it is relatively liquid, and it also marks to market. Here, the valuation is infrequent, and it's somewhat opaque. Just like the credit quality is not necessarily clear or easily accessible. And finally, it's hard to understand necessarily the systemic risks. We know that pension funds have been pouring money into these, and just like, and Jamie Dimon kind of raised the specter of this. He said the ratings on some of these instruments reminded him of mortgages back before the financial crisis. Maybe an exaggeration, but in any case, it's hard to know where all of these investments are right now.
All right, Julie, thank you. Appreciate it. Coming up, a conversation with Melinda French Gates on the next generation of female leaders. More asking for a trend on the other side. Yahoo Finance's Brian Sazi got a chance to sit down with Melinda French Gates to discuss investing in the next generation of female leaders. Take a listen.
We are here to lift up everyone else that has either been on the margins or left behind.
Melinda French Gates is stepping down as the co-chair of one of the world's largest private charitable foundations and is now shifting gears to focus on Pivotal Ventures, a venture capital firm she founded in 2015. Its goal? To direct capital to people outside the mostly white, male business startup ecosystem.
I look for partners who are brave and bold and willing to lead with a new idea.
French Gates started her career at Microsoft in 1987 and rose to the position of General Manager of Information Products. But helping develop and hone a vision for a company that would go on to revolutionize computing and the world had its challenges.
I almost quit 2 years in because of what you call this bro culture.
By 2000, she co-founded the Bill and Melinda Gates Foundation, which aims to reduce health inequities in low-income countries. And thanks to an annual donation of $3.1 billion from friend and legendary investor Warren Buffett, it catapulted French Gates into the upper echelon of the philanthropic world. Now at the age of 59 and with a reported net worth of $13.3 billion, French Gates has opted to forge her own path, launching the next chapter of her career with a different focus and vision, a world of gender equality. Yahoo Finance sat down with Melinda French Gates at Pivotal Ventures headquarters in Kirkland, Washington, to explore how she views her leadership path and strategy to end gender inequality.
At this point in Pivotal Ventures' life, what are you up to here?
I'm really trying to advance women's power in the United States and people of color, because we still are not nearly far enough on women's power in the United States. And in fact, I think there's been a rollback, as we see with the Dobbs decision and other, of many things.
You've been really out in front of this and doing this work, this impactful work, for many years. Why did you get started in it?
Particularly as I was traveling to low-income countries, the barriers are just right there in front of you. They're not unseen when you're in a low-income country. But as I would turn the question back on myself and say, how far are we really in the United States? I realized there was just so much more work to do. We're still 208 years away from equality in this country for women, and we're the highest income country in the world.
That's according to a report by the World Economic Forum, which evaluated gender gaps in pay, workforce participation, education, health, and political participation. French Gates wants to shrink those gender gaps in the U.S. by 2030. That's why in 2019, she announced a $1 billion pledge over 10 years to achieve this goal. To date, Pivotal Ventures has invested in over 150 organizations like Ellevest, a wealth management company by women for women, founded by former banking executive Sally Krawcheck, and the National Partnership for Women and Families, a nonprofit seeking to attain equality for women. These private sector companies, venture funds, nonprofits, and advocacy groups are game changers in 4 key sectors: finance, politics, technology, and storytelling.
The collection of leaders that you are invested in, is there a tie that binds? What makes them successful from your vantage point?
They are looking for diversity in their own portfolio. And they're saying, how can we look at VC with a bit of a different lens? You'd be amazed how many women and people of color I have spoken to who have run the gauntlet on Sand Hill Road, and people just literally don't understand their businesses because they don't have a person of color in their venture capital space, or they don't have a woman, so they don't understand the markets.
The numbers clearly back French Gates up. According to a recent McKinsey report, companies founded solely by women garnered less than 2% of the total capital invested in VC-backed startups. And only 0.1% of VC funds went to Black and Latino women founders.
And so I'm trying to prove out that there are gigantic markets that are being left behind. And guess what? I don't want to leave money off the table. I think there are places we can invest and I can make money.
Within the VC space, Pivotal Ventures makes both indirect and direct investments into companies, seeking Series A, B, and C funds and investment rounds into new businesses. 100% of the funds it invests in have female general partners, while over 60% have at least one general partner of color.
If a leader, a female leader, comes to you and says, Melinda, I want you to invest in me, what qualities are you looking for?
Well, I look for what change they're trying to create in society. Do I think I can get a return on my money? And who are they like as a leader? Do they have a proven track record? And are they taking some risk? I think so often we don't look at females, particularly in the VC space, of being willing to take risk, and yet they are.
I know you've also been talking a lot about having more women in politics, senators, governors. How do you see things? Where is that situation right now?
I think one thing we don't look at as a country is there are 7,000 seats in state houses. And states control a lot of resources and can make very good policy. Sometimes they actually get out in front of the federal government, actually often.
Currently, women make up more than 50% of the United States population, but hold only 28% of the seats in Congress. One estimate says it could take 84 years before we reach gender parity in Congress.
Having those seats represent all of society, I think, again, they will make different policies and laws. But I see those 7,000 seats as needing to be diverse. And ultimately, I think in the United States, it's also time to have a female president at some point.
Why hasn't that happened, Melinda?
That is the million-dollar question. I think we are biased. I am biased. You are biased. When a person walks into the room, we have built-in beliefs because of what society has told us. And so we haven't really seen a woman in the United States in that position before. And so it's actually hard for us to imagine in some ways. So we have to break through these barriers, but I believe if we have more women in state houses, more female governors, more women on the Hill, you are going to see a female in the White House in my lifetime.
Melinda, you should run.
No. No. I'm a new grandmother, and I love my job at Pivotal and my job at the foundation, so no thank you.
Before French Gates assumed the titles of grandmother and mother, or CEO and founder, she started her career in tech in her teens after she learned how to code when her father bought her an Apple III computer.
You said clearly very passionate about these issues, Pivotal Ventures, and the work you're doing here. Growing up, did you see yourself doing this?
No. You can't really imagine. You think you can imagine what you're going to be when you grow up, but you really can't. I certainly wanted to be a female business leader. I grew up in Dallas, and I would watch back-to-back Dallas and Dynasty, and I was like, I don't really want to be like those women who dress up for dinner. Like, okay, that's nice, but I was like, oh, that character, Alexa Carrington, she was a powerful businesswoman.
Stephen, you don't get rich if you don't take chances.
I was like, I want to be like her.
After graduating from Duke University, French Gates joined Microsoft in its infancy as one of only a few female managers. Although she stayed at the company for 9 years, she initially disliked Microsoft's culture and how it influenced her leadership development.
How did this culture in the early 80s when you were at Microsoft, how did that shape your view on leadership?
It shaped it profoundly, actually. I had a great career there. I loved the hard-charging pace. I loved that we were changing society. We knew we were changing the world. But when I got to Microsoft, there was a leadership style that was very debate-oriented, just constantly debate and rough and tumble. And I almost left because I didn't actually like who I was becoming outside of work. Like, I could play the game. I knew how to play the game. I knew how to run the meeting. But then I just said, wait a minute, is this who I want to be? And it wasn't. And so luckily I had other offers, from consulting firms. I was like, I can go get another job. I'll just try being myself. But I thought I would fall flat on my face. But it turned out that by being myself and having a different type of leadership, I could attract all kind of talent around the company who didn't want to have that rough and tumble culture.
The bro culture French Gates is referring to is still rampant in the tech industry. According to a 2021 survey by Trust Radius, 72% of women in tech report experiencing a prevalent bro culture at work, signifying gender discrimination.
Why are we still talking about this in 2024?
Because there is a bro culture at work. And I think you get these industries where when over time they become very male-dominated, then the guys expect that everybody's going to act the way they act. And when they don't see somebody leading or acting the way they are, there's pushback, and they won't be readily accepting of women or women's leadership styles.
To the young female executive in tech experiencing this culture still. What's your advice to them?
Surround yourself with other good men who have your values and other good women. And ask the women and the men, not just for mentorship, but when something comes up at the table, the undercut, the slight, the repeating your idea as if it's their own, ask someone to speak up. It doesn't have to be in a harsh way, but we have to point out these biases when they happen around the table and make it so that it's not okay.
But the hard-charging bro culture didn't stop Microsoft from becoming a financial juggernaut. By 1996, the company reported $8.7 billion in revenue. That same year, French Gates left Microsoft to focus on growing her family and philanthropic work.
I never, ever could have imagined that I would be at the nexus of this wealth that had been amassed from Microsoft and Warren Buffett's wealth from Berkshire Hathaway, and that I would be part of figuring out how to give that back to society in a very strategic way.
How have you been shaped by Warren Buffett and his views on leadership and even life?
When both Bill and I were struggling with, my gosh, we're getting all these letters, amazing causes, a child who has cancer, etc., he would say, pick your bullseye, pick your target and your bullseye, and work in that in your circle of competence and get good at it. And he said, then you won't feel so bad about the pieces that you let fall away.
Since 2006, Buffett has donated more than $36 billion to the Bill and Melinda Gates Foundation, helping the institution give away $77.6 billion in grants since its inception. And in 2022, the Bill and Melinda Gates Foundation ranked #1 among the largest private charitable foundations in the United States, giving $7 billion in charitable support, more than the Lilly Endowment, the Susan Thompson Buffett Foundation, the Ford Foundation, and Walton Family Foundation combined.
He saw in the early days of the foundation that I was struggling, that I had a child at that point, and I was sitting on the floor playing with my Jen, who is now 27, and he said to me, I know what you're doing at the foundation and I respect it greatly. He said, and this is your most important job. And to have a man say that to me, to give me permission to be a great mom, because I think almost every woman, I know I struggled with, how much do I work? Am I there for the kids? How do I do this? How do I do that? That was huge.
After 27 years of marriage in 2021, Melinda and Bill announced their split in a joint statement on X, saying they, quote, "We'll continue our work together at the foundation, but no longer believe we can grow together as a couple in this next phase of our lives."
I mean, how is it like leading at the foundation when you're in that room and you have to make tough decisions with Bill in the room?
So one thing I would say about the foundation is it is a beautiful piece of glue in our lives and has been for a long time. And so people didn't realize that we were even running the foundation when we were having difficult times in the marriage. And I would say at times it held us together. We were even running the foundation as we were negotiating a divorce behind the scenes that nobody knew about. And somehow we were both able to rise to our higher selves, to at least run the foundation. Not always in the specifics of various things at home, but in that piece. So I think we've both kept that principle as we've made this transition, and I would say Mark Sussman, the CEO, has been remarkable about changing the decision-making, because we're not making decisions at home together as much anymore. And I would say, you know, we both show up and try to be our best selves. I wouldn't say we achieve it every day, but I can sit there and even if there's something that agitates me or makes me a little upset, I can say, this is not the time for me to work through that emotion at this table. Let me wait till I get back home by myself.
So you can still show up your authentic leadership self?
Definitely. Definitely. No, I won't show up unless I can be my authentic self. And in fact, I would say I have become even more and more my authentic self the last 5 years there.
French Gates will leave the foundation armed with $12.5 billion to use toward her philanthropic work. As French Gates looks ahead to the next chapter of her career, investing in social responsibility that yields a financial return is at the forefront of Pivotal Ventures.
I think getting society right so that it reflects all of who we are will help all of us get to be and work in society the way we want to and to ultimately thrive. These are new ideas for society, and not everybody's for them, right? Some people think, well, I'm going to lose something if women or people of color come up. It's actually not true, but they will push back on those ideas.
What do you think your leadership legacy will be?
I think it will be that I helped further others, women and people of color, in lots of different sectors, so that people can see that these change makers, that a group coming together can change society, and that we can see women and people of color at all levels of industry, so that, you know, when young girls look up, just like young boys, they see these people who look like them.
That's a wrap on today's Asking for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern. Have a great weekend.